Thanks. Evening, everyone. I'd like to welcome you all, members, officers, and members of the public watching at home to this Finance, Audit and Risk Committee. This committee plays an important role in the overall governance of the Council. Good governance has many benefits, including helping the Council to make effective decisions, improve performance, and be able to respond to risks and opportunities. Can I invite the committee member and scrutiny officer to explain how proceedings will work tonight and confirm that officers in remote attendance are present?
Can I check that the independent member joining us remotely, John Cannon, can hear us?
Thank you. Yes.
Lovely. If a member wishes to speak, they should use the speak button located on the microphone unit. Please wait for the chair's invitation before you begin to speak. When requested to vote, voting will be via the yes, no, abstain button on your microphone unit. Details of how members voted will be shown on the screens around the room and will be visible on the YouTube live stream. In the event of a tied vote, the chair will have the casting vote. Are there any questions before we start the meeting? I'll hand back to the chair then.
Thanks, Amy. Item 1 then, apologies for absence. I've got no apologies for absence from councillors, but are there any now? Councillor Brown?
Dominic Griffiths, thank you.
Thank you. And the Conservative group, any? No? Don't remember the last time I've seen the Conservatives at this committee. Have they just abdicated their position? Okay, then, item 2, minutes from the meeting on 10th of February 2026. I'd like to propose that we take as read and approve as a true record the minutes of the meeting held on the 10th of February 2026. Can I get a seconder for that, please? Councillor Wright Mason, thank you. Any comments on those from any of the committee? Councillor Ward looked like he was looking to comment but getting ready for the vote, in which case can we go to the vote, please?
That motion's carried.
Brilliant, thank you. Item 3, notification of other business. We've had no other business notified. Item 4 then, chair's announcements. In accordance with council policy, this meeting is being recorded and the recording will be available to view on ModGov or via the North Herts District Council YouTube channel. Members are reminded to make declarations of interest before an item. The detailed reminder about this and speaking rights is set out on the chair's announcements on the agenda. For the purpose of clarification, section 4.8.23 subsection A of the Constitution does not apply to this meeting. Therefore, a member may leave the room during the debate and consideration of that item and still be able to vote. However, just be mindful of the business on the agenda and leave an appropriate point in the proceedings. And item 4, Amy will be leaving us shortly, which this will be her last FAR. So I didn't realise it was going to be there, but there we are. So brilliant. Since Amy started at North Herts, she has been clerking the Finance, Audit and Risk Committee, and we're very grateful for that, as always. And as I say, this is her last meeting working. It's her last meeting as well, not just the last FAR. It's her last meeting working for the authority. So I would like to thank her for all the work that she's undertaken for FAR and the other committees. And I definitely wish her well for her future and her future role as well. So just formally put that on record. I'm sure the committee will also like to extend their thanks to you, Amy, for all the work you've done. Moving to item 5, public participation. We have no public participation this evening, so that brings us to item 6, the SAFS anti-fraud plan progress update for 25-26, and we have Darren Bowler to present on that.
Good evening, Chair, and good evening, members. I'm going to be presenting both of the reports this evening on behalf of Nick Jennings, our Head of Service, who sends his apologies for absence. For those that I've not met, I'm Darren Bowler, the Counter Fraud Manager at the Shared Anti-Fraud Service. The progress report up until December 2025, which I believe can be found at pages 15 to 20 of your bundles. Chair and members, this report covers the period, as I said, up until December 2025. Initially, I have to give an apology for a very small typo on the last page where it says progress to Q1, and that should read progress to Q3, which is where we are now. In respect to the prevention work that we've undertaken, a review of the relevant fraud policies is ongoing and will be completed in the last quarter of this financial year. SAFS has circulated 4 fraud alerts to the council relating to identity documents and email spoofing, and that raises the total of fraud threat reports circulated to the council to 25 within this financial year, and to all partners, in fact, in the shared anti-fraud service. Training sessions have been set and circulated, and in an update to the report, I can confirm 5 sessions were delivered in Q3, including the all-staff briefing. In November, open to all officers across the authority, and also an update on ECTA in 2023 to SNG, and training to the HR team on recruitment fraud. Having mentioned ECTA, I've been asked to provide the committee with some headlines about the Economic Crime Transparency Act, which affected all local authorities from September 2025 in respect to an offence failure to prevent fraud. The way in which this legislation was drafted, creating this new offence of failure to prevent fraud, means that the local authorities and other similar bodies have been effectively vicariously captured. And I say vicariously because when you look at the definitions within the Act, such as large organisation, which most authorities will fall into, definitions of people who commit the offence, which they refer to as associated persons, and most importantly, the purpose of the offence, it is the corporate world that where this legislation was aimed at and will bite the most. And that is very clear when the legislation refers to the intention to benefit the organisation, and that is crucial to the offence. The failure to prevent fraud is something where the organisation will benefit, in short, financially. And that legislation will capture offences also committed outside the UK, both more appropriate, these 2 areas, after the corporate world than the world of local government. So we must comply. And from an anti-fraud point of view, there are benefits to having this legislation in place. Essentially, there's 3 from my point of view, and that's to deal with the large corporations committing fraud and operating internationally. The legislation will help drive improve compliance to governance and promote internal controls, which is a very good thing. And finally, to discourage economic crime. And together, these 3 benefits will hopefully drive the prioritisation of fraud prevention, which is also what SAFS brings to all its partners. So just referring back to the report, reactive work, a total of 116 referrals have now been received, which is an increase in line with some awareness campaigns we ran internally and externally in the 3rd quarter, which I mentioned at the beginning of the report. 39 cases are currently live for investigation and 31 are at a referral stage. The estimated loss on all of these cases is approximately £150,000. 31 low-level reviews of council tax discounts in relation to benefit cases has identified savings of around £17,000. A total of 8 social properties have been recovered from providers in the council's area and allocated to persons from the council's waiting list. Whilst the savings value is high financially, the positive impact on those family units is likely to be immeasurable. Proactive work, the National Fraud Initiative data mashing exercise has now closed formally, and with 15 potential fraud errors and savings identified through the prevention, totaling £55,000 having been reported. Work has immediately followed the closure of the national exercise on the Hertfordshire Fraud Hub. And since Q3, there are 439 matches which have been processed, with 6 frauds identifying £26,000 in savings. The last table on the report lists progress on our KPIs, which are currently met, on target or part met. And at that point, I'm happy to take questions, Chair.
Thanks so much for the report and for the additional info on the Economic Crime and Corporate Transparency Act. Questions from the committee? Councillor Wright-Mason.
Yeah, thanks, Darren. Very interesting and obviously good keeping us compliant. I just had a question on line 11 under reactive work about the 116 allegations of fraud. It kind of breaks down roughly by service area, but that seems like quite a range in terms of potential severity. I was wondering if there's kind of like a headline most common type that we've found, at least within kind of these numbers.
What page was that, Councillor? Sorry.
Page 17 of the paper or page 3 of the report.
17. Thank you. Paragraph 11.
Yeah, so between April and December 2025, 116 allegations of fraud have been received affecting service areas such as housing, council tax, procurement, and blue badge misuse.
Is it more detail you're looking for in relation to the particular areas?
Yeah, the service areas. Yeah.
So housing, because there is no stock here, a lot of it is going to be housing application fraud or concerns over that. The council tax, quite straightforwardly, is usually linked to complaints of undeclared adults also at the property. There are some investigations that will be joint investigations to a stronger or lesser degree with the DWP, depending on the level of the offending and how that's working. Procurement, I think there is just the one that's been reported in procurement this year, which is it's not unusual to have low numbers in procurement because of the process and the systems. Sometimes in certain areas, we may see higher numbers, but that's particularly low here. Blue badge misuse, your civil enforcement officers have been very busy and they refer those misuse cases into us, and sometimes we get those from members of the public. So all in all, with a very broad brush, that's what I would expect to see from a district, and historically what we generally see from North Arts.
Thank you.
Councillor Brown.
Thank you very much for your work on behalf of this authority and the money you save us. I'm particularly interested in the proactive work, actually, that you've prevented quite a lot of fraud, or so you say. I wondered how we compare with other authorities. I mean, you're obviously a shared service, so you work for other authorities as well. Do you benchmark it at all? Are our savings and both the reactive and proactive work, are you saving us the same sort of money as in other authorities? Are we better or worse? Can you comment?
When we each month we get a set of figures from our case management system, and then as a management group we do look at a very informal benchmarking. I'm going to say formally, we have no favourite partner in SAFs. Everyone is treated on their own merits. I suppose you could draw some comparisons to East Herts Council, rough sort of geographical area and things like that. But it's very difficult to actually say, this is what we're expecting, because we're talking about human behaviours by people and residents that are within county boundaries. Even though we're in a shared service, we provide all our partners with the same support in relation to fraud prevention, fraud identification, and sometimes it's handled differently in different councils. So taking all of that into consideration, I would suggest you're definitely not an outlier in comparison to other things. And in some areas, I would suggest that you're probably a little better. But I'm not going to specify because I shall get into awful trouble later with other committees.
Councillor Willoughby.
Thank you, Chair. I'm interested. I mean, you've mentioned allegations coming via the parking enforcement team. What other sources of what are the other sources of allegations?
So full detail of that we published in the end of year report. So I think I bring that in around June time to this committee. So, but in general terms, we have ways that members of the public can contact us. So we get a lot of work from members of the public, and generally speaking, it's 45-50% public, 45-50% staff, colleagues at the various councils, and this is roughly the same across all the partners as well, actually. We do see odd trends and peaks and troughs on occasions, depending on what sort of work that we've been doing on a promotional basis. And then the 5 to 10% that's left over is generally other organisations. So we might get a referral from the police that they've identified something. The DWP refer matters to us, and yeah, so it's a good mix, but it's where we're very content with. There's always work to do, so we're not complacent, but we are content of the main work coming from where we want it to come from. That's within the organisations that we work with, and also from the members of the public. So that is very good to see. It's a nice balance.
Brilliant. Do we have any questions from our colleagues online? No. Amazing. Any other questions from the committee? No. In which case, the recommendations here are that we note the progress by officers and the shared anti-fraud service to deliver the anti-fraud plan for the council. Can I get a proposal for that, please? Thank you, Councillor Willoughby. And can I have a seconder, please? Councillor Brown, thank you. Any debate? No. Amazing. In which case, let's go to the vote.
That motion's carried.
Which brings us to item 7, which is the SAF's proposed anti-fraud plan for 26-27, and take that to Darren.
So the plan is explained through pages 21 to 34 of your bundle, and at pages 26 and page 32 you can find Appendix A and Appendix B. The plan is broadly the same as the current plan that we're working to. And as members have received a copy with the papers, I intend only to provide a brief overview, and we'll be happy to take questions after. Through the report, explanation is provided as to how this plan sits in relation to the national context of fraud, to the provisions of SAF's resources and the key performance indicators agreed with senior officers, along with the relevant standards of service. The report details a number of external reports and papers that provide the background and rationale for the content of the plan and why it's necessary to have this plan. The reports and papers referenced here are highly recommended reading to all members of the council, not just those on this committee. They also reference relevant legislation, including the Economic Crime and Corporate Transparency Act, already mentioned this evening. And at that point, Chair, I'm going to break for any questions.
Yep. Do we have any questions for Darren on the proposed plan for next year? Councillor Ward.
Thanks, Chair. Yeah, thanks for the detailed plan. I was just really thinking about some of the comments on page 29 around staffing and I guess like, as you mentioned, the sort of national context and intelligence and IT use of IT, etc. As you probably know, I think the government's recently launched a new fraud strategy, and an online. I think the online crime centres being created, and in that they've been highlighting the use of AI to fight fraud. So I was just wondering, in our context, have you seen first a little bit about it you talked about a minute ago, but have you seen yet any instances of AI being relevant in terms of fraudsters and criminals using it? But also then I guess the flip side is, what plans have you got in terms of trying to leverage and adopt AI used to provide better intelligence and tools to help deliver the service and fight crime?
So, in the wider context, there's no doubt that AI is a threat to a number of different things, particularly the vulnerabilities around fraud. We are aware of a number of different aspects where this AI has improved the ability to fake people's attendance at meetings and breach the security of very high level international companies. That's not where we see local authorities being affected. There has for a very long time been resources online to be able to get documents. In fact, a lot of the documents that we see are actually homemade, because you can cut and paste and alter a PDF, and you can change bank statements to appear to be from one address when they're actually originally from another. The date ranges change, and actually the spend starts to change. And we have seen bank documents submitted in a procurement process for a company that highly inflated the balance sheet on their bank statements. So it's out there, it's prevalent, and there are now AI-enabled capabilities to make these documents look even more genuine than the ones that people are homemaking. There are companies that actually will provide that you don't need AI. They'll make you some documents. You can freely purchase on the online for joke purposes a copy of a United Kingdom national identity card, which doesn't exist. But you can buy one for all sorts of other countries around the world. So it's out there in various guises already. AI is just going to make it better and somewhat harder to detect. That said, it does fall down sometimes, because we are probably all in this room seen emails to our personal accounts pretending to be from various different national, international organisations regarding antivirus, regarding banks, regarding all sorts of things. They're pretty awful, particularly in their content of the use of the English language. AI has now made that so much better. We're seeing longer emails in relation to advance fee frauds where people have paid some money up front, but they're now gone the other way. They're so good, they're obviously a fake, as opposed to being so bad, they're obviously a fake. So whilst the context of what's going on is changing, the landscape really hasn't. It's just appearing in a different way, and that's part of our horizon scanning, to use a phrase, to bring that back and make sure when we're putting out alerts, and we get alerts, fraud alerts that we circulate, 25 so far in the first 3 quarters of the year, and they come from the National Anti-Fraud Network, our other organisations similar to ourselves working in local and central government, the police, and all sorts of sources. National Health Service Counter Fraud Authority as well. So by being linked in with all of colleagues working in the same field, we're hoping that will provide a robust network at this level. It's a different level to when we're talking about the penetration through firewalls and things like that, using that high level of AI, but it's out there, it's there. And some of those alerts we've circulated will be referencing that use.
Any other questions from the committee? In which case, the recommendation is to review and approve the anti-fraud plan for 26-27. Could I have a proposer, please? Great. Well, I'll take Councillor Wright Mason as first with a hand up there, and I'll take Councillor Willoughby as seconder on that one. Thank you. Is there any debate? No, in which case, let's go to the vote on that. Thanks.
That motion's carried.
And thanks. Thank you, Amy. Thank you to Darren for the updates and the proposed plan for next year as well. Which brings us to item 8, and this is the SIAS progress report for 25-26, and it's Chris Wood to present.
Thank you, Chair. You'll recall when I was here in January, I sat here quite glum and wondering how we were going to deliver the plan. Suffice to say, I'm sitting here with a somewhat broader smile on my face to say we've made significant progress. Typically, I wrote all the figures I was going to update you with in my favourite leather-bound notebook, which is on the corner of my dining table. So I will try and recall what all those figures were as we go through the report. But ostensibly, that's what I was going to do rather than focus on the information that's in the report. The world's moved on in 2 weeks since it was published, and actually the delivery profile looks somewhat better. There's a table at 2.2, which is a list of our final internal audit reports issued. You'll be aware, having circulated it, that I've sent one more out, which was the follow-up on high priority recommendations. So actually there's 7 that have gone out since the last committee. I will return to high priority recommendations and propose plan amendments if members want to later, but I think I'm keener on just referencing the performance stats and the changes in 212. So we have now delivered 87% of the plan instead of the 82% that we've got there at the moment. And a big thanks actually both to staff at North Harts, to Ian, who's helped grease the wheels, if you want, and make some of the audits happen. Thank you also to my SIAS team and to BDO as our co-source delivery partners. They've all been working very long hours. There's actually a Teams chat going on right now. Everybody's green and online and delivering audits right up to the deadline next week. In terms of projects, we've moved on to 15 of the 21 projects being delivered. I can tell you that 4 more are sitting with me to clear as part of the quality review process, so those should go up before the end of the year, and that will take us up to 19 draft reports issued, which is the target for the year. There are 2 audits that won't finish, and you'll see them in the next audit, in the audit plan, which is the next agenda item. The Anderson House work, which was always scheduled to start very late in the year anyway, and the EV charging audit. So those will hopefully complete in April and early May, in time for our annual assurance opinion, which I bring in June. I think there's a June meeting, which is when everything should be completed by, to allow me to form my conclusion or my annual assurance opinion for North Harts. But much happier, broke the back of that audit plan. Lots and lots of work has happened since I was here in January, so much more pleased with that. In terms of, I'll probably, if members wanted me to dwell on the high priority recommendations, we've still got 2 we're carrying there. One is on the cyber resilience plan. which is largely implemented, but the team still deem it open, and we've reported it as still open in the report I just mentioned, which was the follow-up of high priority recommendations. And I have an email update on the estates one. So the update just missed the publication date of this, but they are now looking to implement those internal procedures around rent reviews and things by September, not by the end of March. As I said last time, that recommendation is also largely done. We're talking about a small set of internal procedures, which were particularly important at the time when they had, I think, some interim or agency staff in the team, but they've now got an experienced team of, I believe they're full-time staff. Ian will correct me if I'm wrong, but they know what they're doing, and so those internal procedures are perhaps less important. But both of those high priority recommendations are substantially done, certainly in all material respects. I don't have any plan change amendments to report, which is the other thing I'm always supposed to bring to you. So if I pause there and take any questions.
Thanks so much for that, Chris. I see Councillor Ward is already there with questions, so I'll go straight to him in there. Councillor Ward.
Yeah, thank you, and thanks for the detail, Chris. Question, well, maybe for yourself, or probably Ian. On the cyber resilience one, I would probably first note that it was originally opened in April 2023, which for a disaster recovery type thing is a long time. I'm glad to hear that you think materially it's largely been done. I was reading some of the the latest action update on it, which is on, if you haven't got your notes, but page 51 of the whole pack, and it was talking about I think a test that was just conducted in March, which is good. But I was wondering, do we actually know what the results of all the testing was, and is that satisfactory?
Yeah, it was part of the exercise. It was a very good exercise. Wasn't a pass-fail exercise. It was very much a kind of lessons learned kind of process to go through what we would do in the event of a cyber attack. I think we were very reassured that there were good measures in place to prevent a cyber attack in the first place. But we still have to look at what would happen if we did get through. So it was very thorough in terms of looking at what are our priorities, what would we do in communications, both in terms of letting councillors know, letting the staff know, letting the wider public know, some of it being kept confidential, some of it being more widely known. But also, yeah, what services do we prioritise getting back online? Because essentially our approach would be to, almost start again. So it's a case of, what do we start with first? And that was kind of the focus of it, was to sort of do that at leadership team level. The next stage now is sort of to segregate that down further into service areas so that each service can get their say in terms of what would happen. So that if it does ever happen, I hope it won't, we're kind of ready to go. Actually, we'll do that in that order, rather than having that discussion when you're kind of in the thick of it, if it did ever happen. But a very positive exercise and some lessons learned in terms of some of the cascade arrangements to make sure that everyone's aware what's going on, particularly.
Follow up on that, if I understood it, the final piece that's left is essentially just getting a formality of signing off the resilience plan. That's it, basically?
Yeah, please.
I think that was part of the discussion we had at our cybersecurity board. Is there's been a plan in place for a while, but the team are constantly updating it because the threats change all the time. So we almost decided you need to approve it now, and then you can constantly tinker with it rather than have it in draft and constantly tinker with it. So it's not like there's been nothing there. It's just that they're doing all the right things, which is updating it, exercising, testing, and then updating it again. And we kind of agreed it should come to the cybersecurity board to be agreed, and then probably the leadership team, I imagine. And then from there, you continually exercise it because that's what you have to do to keep up with all threats out there. but I wouldn't say there's been the absence of a plan over the last 3 years, I think.
Brilliant. Councillor Willoughby.
Thank you, Chair. It's a question about the client satisfaction and the fact that 20 questionnaires have been issued, but only 3 have been returned. Is that something you would expect, or how are we how are we progressing those ones that haven't been returned?
Mic came on. Occasionally we do a chase of them. We haven't done a big chase recently. Priority's been finishing the work, but response rates across our various partners are usually somewhere between 15 and 30% or so. We can do a chase, but it's a bit like I have a service from British Gas, for example. They send me an email and I ignore it because I guess it's probably the same. People have got other priorities. We take feedback as the audit goes sometimes, and then we do ask how things are going. We spoke to the director, am I going to get it right? Steve Crowley, so I forget which he is, commercial or enterprise. About the Churchgate audit and our plan. He just had a little bit of feedback as we went, and we changed tack. And so some of the feedback can be informal, but in terms of our formal customer satisfaction surveys, it is low. We can do a chase and remind people. I know they did a similar chase at Welland Hatfield. They got a big response, and then things fall away again. But I'm as interested in the feedback we get as we go along as much as the formal surveys at the end.
Sending out in the first place.
It's good practice to send them out. We do get some really nice feedback. The 3 that have come back have been positive. There's often a view that you only get the bad ones back, but actually we've had 3 good ones back. So I'm pleased with that. If something had gone drastically awry, I suspect Ian would be messaging me with a cross-face emoji to give me some feedback as well, and that hasn't happened. So there are other mechanisms. Would I like a higher response rate? Yes. Have we ever got 100%? No. But the feedback I'm getting is largely positive, or is positive. I haven't had any bad feedback this year, so other than, oh, leave us alone.
Yeah, as I say, it's partly down to me. When I do chasing and make people do responses to them, I sometimes get a list from Chris, and I sort of email and go, can you do a response to the feedback survey? We get the general reply, but I haven't always got the time to do that. So, but Chris is right. If people will let me know first, or let Chris know directly first before they actually do a feedback survey with anything negative. So we get the feedback back to Chris, and they always respond. So I'm happy that we're kind of getting the informal process working really well, and actually the formal process isn't always needed, but it would be nice to get a high percentage. I do agree.
Brilliant. Any other questions? Can I just ask one? At point 2.13 of the report, you're highlighting the reasons and the factors that were contributing to why some of the audits are falling behind, and you highlight at the end there low-level anecdotal evidence of senior partners. Senior staff at partners experience capacity challenges linked to LGR. This probably might be more relevant for the next item potentially, but if we're having issues now, and just thinking you can answer it at the next one as well, but just having that convo about how much is potentially in the next. Are we not going to have issues next year, or are there already things in progress to try and mitigate against these?
Light's still on, so I can answer now if you want. I am anticipating challenges. We have spoken to heads of audits at authorities who have already done their LGR. We've had North Yorkshire, Bucks, Cumbria, etc. have already been through this. Most of them experienced their real problems delivering their plans for 27, 28, not for 26, as in their equivalent of the year before. they undertook LGR. But most also learnt the lesson that you need to change your plan for that year, probably have less in it, complete it in good time, adapt that plan according to circumstances, recognize that there are going to be new entities in place. So that, that needs to be borne in mind. Will there be an impact? Yes, I think there will be. I myself am already drawn into LGR more in terms of working on various work streams and on the delivery unit. And I've seen the pressure on me ratchet up and as we prepare for the transition phase. So I anticipate that will be reflected across a number of other senior officers. That said, there are a lot of team members around authorities who are still delivering business as usual, and delivery of this audit plan is part of business as usual. So we'll have to find a way of getting things done. But I think that capacity issue that I've reported this year will be an issue again, and not just here, it's going to be across the partnership. We have to get our job done, but also understand the pressure that officers are under. So we'll see how it plays out. But at the risk of running on to the next item, the leadership team have agreed that plan for next year, accepted the timings of those audits, etc. So there's an acceptance that certainly right now that's what we're going to set off to deliver. And sorry, I have crossed over to the next item slightly, but I'm not sure it really matters.
Thanks so much for that. John Cannon, is it? Online, we have a question.
Thanks, Chair. Thank you for the paper. I liked the items in the plan. They make a lot of sense. I just had a couple of questions, please, Chris. Number one, I wondered, has the plan considered last year's reserve list? I can see there was a new reserve list for the coming year. How does it compare to last year? And secondly, I noticed there are 5 audits in the plan, which are project assurance. I think there's a couple of decarbonisation projects. There's the museum piece, Church Gate, and the reorganisation. And I wondered, therefore, are you comfortable with the balance of days between those project assurance shadowing exercises and more the control framework reviews that would take place in the other items on the plan?
Yep.
Yeah, my one as well, but feel free if you want to answer now and then we'll come back.
I think we should probably, at the risk of going back to procedure, just vote on the previous paper and then I'll try and remember the questions or ask John to rephrase them because we have crossed firmly into the next item.
Yeah, that's fine.
I hope you don't mind, but
we'll come back to those questions, John, on the next item.
No problem.
Any other questions on the progress update on the audit? No. In which case, the recommendations on item 8 are to note the SIRES progress report for the period up till 13th March 2026, and we've had some more updates up until present. Note the implementation status of the reported high priority recommendations, and note the plan amendments to 25-26 annual audit plan, but there were none, as Chris alluded to there. Can I have a proposer for that, please? Councillor Willoughby, thank you. And Councillor Ward, can I take it a second? Thank you. Any debate on that? No, in which case, let's go to the vote, please.
That motion's carried.
Brilliant. In which case, now we move to item 9. Now, this is the SIRES proposed plan for 26-27, and Chris to present again, please.
thank you, Chair. And to our independent member, I'll come back to the questions, albeit I might ask you to rephrase them after my introduction. Apologies for the length of this paper. This one was probably a challenging read, and I hope you went straight back to the plan at the bottom of the report. But I have set out, bearing in mind we've got the global internal audit standards, which are relatively new, being about a year old. So I have set out the requirements of the standards that we have to follow in putting a plan together. I've described the planning approach and planning principles, if you want, in there, and how we go about planning. Key is the meetings we have with all the directors here at North Herts, and then the plan, as I mentioned at the end of the previous item, goes to the leadership team, where it receives officer challenge around the timings and the audits that are included in the plan. And that was agreed a few weeks ago, and is now presented here for your approval. If you're able, through you, Chair, I wondered if we could turn to John's questions, or whether we should pause there.
Yeah, we can do. And John, if you want to ask your questions again, Chris can answer them this time.
Many thanks. Apologies. I was getting ahead of everybody with that one. I didn't see the break in the papers. So, yes, Chris, thank you for the paper with the plan. I like the plan. It makes a lot of sense. I had a couple of questions, please, and they are noticing there's a reserve list for the coming year. I wondered how this new plan compares to the reserve list for the year just gone. Is there a thread of continuity that we need to keep? And secondly, within the plan, there's 5 project assurance exercises where internal audit shadow current developments. And I just wondered, are you comfortable, please, with the balance of days that's allocated to those items versus the other ones where work would take a more traditional approach, looking at the control frameworks around the topics in the plan?
Thank you, John. So in terms of the reserve list, I'm trying to remember what I had on them, but I think the only one that is replicated from last year's list, it was the provision for some time on LGR. I think that was in the reserve list last year and has actually gone into the main plan this year. Thinking back to last year, there was an IT audit, a service desk audit, which we had proposed last year, but it's not as important as keeping on top of cyber resilience. So that didn't make it into the plan. I think we've got it on the reserve list here, actually, if we've carried it again. I'm just struggling to find the page, but yeah, we've carried that one forward from last year as well. It's one of the few bits of the IT audit universe we haven't picked up in recent times. So that's been carried forward on the reserve list as well. So overall comfortable with what's on there. The reserve list is only a starting point, though, for any discussions of an audit needs to come out. The plan is dynamic and flexible, and if something arises in year, it may actually trump something in the reserve list in the first place. In terms of the spread of days between embedded or project assurance, the embedded assurance still looks at controls in place. It's probably more about the timing of when you provide that assurance. So we, instead of coming along, for example, at a specific moment in time and delivering a traditional controls audit, we will be looking at controls along the way. So as Councillor Albert knows, we've been on the Leisure Centre Decarb Board for the last 2 years, and we still make comments on governance around the project. We still use project methodology to come to some of our conclusions. But instead of dropping in at a moment in time in the old school audit way, we work over the life of the project and are involved in all the meetings, and we provide assurance as we go. It's probably more around the timing of that assurance rather than whether we do or don't focus on certain controls and control frameworks and that kind of thing. It's just a different approach to achieving the same assurance opinion at the end of the day. I hope that's answered your 2 questions and haven't gone too far off tangent.
Thanks, Sean. Any questions from the committee on the plan for next year? No, in which case the recommendations are that members approve the proposed North Arts Council internal audit plan for 26-27, and members are requested to note the internal audit strategy and service plan and invited to provide any comments on that. So can I have a proposer, please? Councillor Wright Mason, thank you. Can I have a seconder, please? Councillor Ward, thank you. Any debate or comments on the plan from the committee? As I say, there's a lot in there, and hopefully we can get all of that done. But everyone's aware of all the comments there from Chris and the challenges we all know that's bearing down on us in the background with LGR as well. But let's see how we go, and hopefully we'll get those all done. In which case, let's go to the vote, shall we?
That motion's carried.
Thank you. Thank you, Amy. And thank you to the members of the shared services, always for the updates, always for the forward plans, and always for coming to us with all the relevant information and the details that you do. It's very much appreciated. Thanks so much for that. Brings us to item 10 then, and that's the Local Code of Corporate Governance 2026. And we've got Ruben and Ellie to present, please.
Thank you, Chair. Good evening, committee members. This report is to seek your approval of the Local Code of Governance for 2026. It's at page 101 on your report pack. I'm going to go through the highlights of the report, and Ellie's going to cover the Appendix A. As you'll be aware, it's good practice for the Local Code of Corporate Governance to be reviewed annually by FAR, and the last time we came to you guys was in March 2025, and we approved that code for that year then. A bit of background on this: the governance framework is based on the Chartered Institute of Public Finance and Accountancy, CIPFA, and SOLIS, the Society of Local Authority Chief Executive is SOLIS, their framework with the snappy title Delivering Good Governance in Local Government. It's based on the 2016 edition principles, and this remains the assessment of governance for us in 25 and 26, this period. The Local Code Appendix A follows a slightly different format to which you've seen before in previous years. We had officer training by CIPFA on delivering good governance, and there was an amendment to the template of the code, and the contents were implemented to align with these best practices. Now, as Ellie attended that, I'm going to ask her to provide the detail set out in Appendix A for your consideration. Thank you.
Thanks, Ruben. So yeah, the framework covers principles A to G. So principles A and B of the local code provide overarching requirements for acting in the public interest. Principles C to G focus on the implementation of governance and achievement of outcomes. So the principles cover themes including ethical values, stakeholder engagement, the authority's capabilities, managing risks and accountability, which can be found in more detail at Appendix A, which is page 105 of the reports pack. The diagram also shows that, as well as the principles and sub-principles in the table below. So as Ruben mentioned, CIPFA and SOLIS published an addendum for the framework in May 2025. So the addendum addresses changes in local government governance since 2016, and it encourages a more robust review of governance arrangements and improved accountability to stakeholders, including our local communities. So in line with the guidance, the addendum was considered partially for the AGS compiled in 2024-25, and the advice in the addendum will be fully embedded when compiling the AGS for the coming year, so 2025-26, as set out in the local code for 2026, which is Appendix A. So the code now includes more North Hart specific government arrangements, policies and procedures. So it's a bit more practical and organisation specific. So the annual governance statement itself will focus more sharply on reviewing the effectiveness of the arrangements we have in place and how they work in practice. So we've outlined this in the code the council's governance structures and the responsibilities of each of those. This is also followed by a list of sources of assurance for evidence of where the council's governance arrangements are functioning effectively. The leadership team have reviewed the new local code in its updated format, and their feedback has been incorporated. We will note that there's a missing title in one of the principles in the code, but rest assured the full content of the code is in that section. So this will be corrected before publishing on the website. We also have a mention of media relations training. Wording on this will be updated ahead of upload, as we've since had an update internally that this is only provided to cabinet members, but all other members are directed to LGA training. So after the code is approved by the committee, it will be placed on the corporate governance internet page, as well as shared internally on staff hub pages and in the members' information bulletin. So this will then set out the basis for how we prepare the annual governance statement for 2025-26, and we will review the effectiveness of our governance arrangements as laid out in the local code of corporate governance at principles A to G. And as most of the committee members will be aware, we'll be bringing back the draft annual governance statement for 25-26 to FAR in the summer. So yeah, just to wrap up, the recommendation is for the committee to approve the local code for 2026. Thank you.
Thank you, Reuben and Ellie. Are there any questions from the committee on the local code of corporate governance? Councillor Libby.
Thank you, Chair. Well, it's more of an observation, really. I mean, it's a very, very complex document, isn't it? To what degree is it going to be possible on a day-to-day basis to identify compliance with it, as it were? I mean, for a start, are staff going to be fully trained on this? Obviously, there are specific areas which are more pertinent in some work environments than others, but the fact that it's so complex actually makes it quite difficult to uphold, I would suspect.
It's a really good question. It is something that we talk through with the leadership team when we go through this document. So it comes from their practices and their framework for governance and making sure that they're complying with those principles. It is complicated, but it is embedded within in our culture. So it should be something that happens on a day-to-day basis. And we check those as we go through the year. We have an action plan which goes along with the AGS, and that is regularly updated and checked by leadership team and managers and services.
It's a good question on that. That's why I asked about the media training, because I was looking through that one. Are these things happening? It's all good intentions, but does it happen? Chris, did you want to say something on that?
If I may, thank you, Chair. I think just by way of context, I prepare and coordinate and co-author the equivalent documents at HCC, and effectively, if you think about the two documents, this one describes our standing governance framework and governance arrangements. It's a description of how we meet the principles set out in the Sit for Solace guidance. The AGS itself, which comes to this committee separately, is a review of effectiveness of those governance arrangements. And within your Code of Corporate Governance here, you have a very nice table, which I'm going to borrow actually, on the various sources of assurance about how you determine whether those governance arrangements have worked. And we in internal audit, counter fraud colleagues are amongst your assurance providers. One of the things I do is give my annual conclusion on governance, risk management and control. So our annual assurance opinion is part of the assurance framework telling you that those governance arrangements as described here actually have worked and are in place. And we probably haven't looked at every single thing in there, but your assurance providers are there through the annual governance statement to tell you that independently that those arrangements are functioning and taking place. And sorry, just a little addition to explain, you will get assurance that that is working when the annual governance statement itself comes.
Thanks, Chris. Councillor Ward.
Oh, thank you, Chair. I was just actually, it kind of ties into what you were just talking about, Chris. That I was just looking at pages 107 and 108, which are extremely clear. I really like them on the sources of assurance and the governance structures and responsibilities. And I was reading through the sources because most of the sources have a human embodiment, as it were, like yourselves in terms of internal audit and anti-fraud and etc. And then looking at the governance structures with the golden triangle, etc. It just occurred to me there's no, and this might be just it is what it is nationally, but there's no role that's a chief risk officer. So there's a source of assurance which is risk management, but there isn't a role. I think we don't have a role that's a chief risk officer. Is that right, or is that embodied in one of the other roles, like yourself, Ian, or somebody else? I'm just wondering why that's the case.
So our risk strategy sets out that I am your officer risk management champion, and Councillor Albert is your member risk management champion. So we do have people who are championing risk, and we do have kind of documents in relation to risk. So the regular reports you get here, both the mid-year and the annual one, are there kind of provide assurance that risk management is happening, and the annual one also goes to council, full council as well, provide that assurance onto full council.
Yeah, I think it's what you just said, that golden triangle is the different forms of risk and how each of those officers are core to mitigating against it as well.
Yeah. I was coming from a corporate world where it's quite standard to have that as a separately identified role. That's all. But it's fine. Thank you.
Fine. Any other questions from the committee? Just one from me. So as you alluded to, the code itself is reviewed annually, and then when we look at some of the elements of it, so look at page 110 through 111, you outline part of Principle A, you outline the different policies that we have in place. Is there anywhere in this where there's an indication of when individual policies should be reviewed and timescales?
Each policy will have a duration of how long it will last, and we can add those in, but it's service specific. But we can add that detail in when we come to look at the AGS in its draft form for you.
Yeah, I'm just curious as to if there's any kind of standardization across the individual policies, or the only reason I asked is because I went back again and you did answer my point about media training. I went back to look at the media policy generally, and that was last updated in 2022. So I'm just curious as to whether or not there should be more focused and specific time elements introduced, and that's part of this governance code as well. Chris wants to answer this.
Yeah, sorry, Ian, did you want to go first? But I did have a view on that.
We used to have expiry dates on our policies, and then I tried to influence. We moved to actually, it's more important to review a policy when it's reviewing rather than expiry dates on them. So actually, what we tried to do is put the onus on the policy owner to make sure it's kept live, so that if it needs to change, it changes. If it doesn't need to change, leave as it is.
How do we know if it needs changing then?
We rely
on
the policy owner
owner
to kind of, it's their specialty. They will know what's going on in that area, and they will know when it needs to change. Obviously, there's important to have some oversight as well. So involve the things like areas of assurance, like Intel will come along and have a look at policies and go, that's a bit old, that one. Are you sure it's still current? So you've got other lines of defence as well. But principally, it sits with the policy owners to make sure that they are on top of it and keeping it current.
Okay, thanks. Chris, did you want to comment as well?
Thank you, Chair. I just wouldn't put that information on this particular document. This document, under transparency rules, has to be published on our website. It's meant to be accessible and understandable to our residents. And if we start putting too much information in this document, I think it loses its impact and indeed detracts from its original purpose. So Ian's absolutely right. Certainly when we come across policies that are out of date or don't represent what currently happens, we pick those up and audit. But I just wouldn't monitor that through this document. Most policies have a pretty good table on the front, which if kept up to date will tell you when they need updating and when they were last updated. But yeah, I just wouldn't put it in this document for managing that kind of thing. It becomes incredibly complex and then will lose its impact.
Okay. Yeah, John Cannon.
Thank you, Chair. Some of the questions already have addressed some of the things that were nagging at me. It is a complex document. I think it's an exercise that's been worth doing. This sort of mapping will be almost a governance dictionary for you. One remaining point for me, perhaps, is can anyone comment, please, on how this compares to the AGS for how this document compares with the similar ones in other authorities? Do you find other authorities are shorter with theirs? I ask because there are a number of things that appear in more than one chapter, and therefore there's the risk of duplication, but there's also the risk that if something did not work as intended, you could end up failing the same thing across 5 dimensions of the code. And I wonder if that could be something that would backfire.
Yeah. Did Ruben, Ellie want to offer a view?
Yeah, so at the SIP for training, a lot of examples from other councils were provided. The different documents do vary in length, and that is just council specific. So we have tried to follow best practice in terms of keeping the documents as short as they can be. One change for this year is that obviously a lot more is in the local code because it's a lot more council specific, which means that the AGS will hopefully be a bit shorter. So yeah, it kind of varies between, but yeah, we're trying to keep it as short as possible.
Thanks.
Thank you. I had one follow-up, please, on a slightly different tack.
Yeah.
Thanks. Page 135 talks about a property acquisition strategy that's going to become part of the asset management plan. And I wondered, would that asset management plan be a future agenda item for this committee, please?
You say 135?
Yes. Yeah, it's the first item in Principle E, developing the entity's capacity. And it is the third bullet point in the commitments made. The asset management group, then the council has a property acquisition development strategy. It will be renewed and refreshed and incorporated into an overarching asset management plan, which is in preparation.
Yeah. Ian, do you want to comment on that? Or was that something else?
I think probably yes, it could be. Just thinking through it, probably does have a governance aspect around reviewing it. We just need to check the service area whether there's any kind of bits of it would therefore make it difficult for this committee to discuss. We've got any sort of detailed information that will be confidential, but let me look into it as to whether that would be appropriate to this committee as to what it's going to contain and therefore whether it would be apt for this committee to look at. So I think more detail first, but have to look into that for you.
Thank you.
Thanks, Sean. That was a really good point. Any other questions? No. In which case, the recommendations for this are that the committee approves the local code of corporate governance for 2026 as at the appendix that we have in the reports. I'm happy to propose that. Can I have a seconder for that, please? Councillor Wright Mason, thank you. Any debate on this item? think a lot of it's been said there, but let's go to the vote.
That motion's carried.
Thank you, Amy. Thanks, Ellie, and thank you to Ruben for presenting the report to us. And that takes us to item 11 then, and that's the third quarter RONI budget monitoring update, and that's for 25-26, and that's Ian Cooper to present. Ian?
Thank you, Chair. I'll do my usual preface that this is the Cabinet version of the paper, so it is your role to comment on this paper from a governance and risk perspective. So recommendations are there to will reflect that rather than the recommendations to Cabinet. It follows the usual format, predominantly looking at Table 3, which is the reasons for the variances on the revenue budget that come up in the latest quarter. The first one being one of the biggest ones relates to the fact that as at the end of the last year, we didn't actually have a need to borrow. We hadn't quite spent all our capital budget and our capital budget for capital funding budget, and therefore we don't underline need to borrow. So therefore, there's no need to charge a minimum revenue provision into the budget for this year. So that creates an underspend of 400,000. That charge is coming. We have been spending a lot of capital money this year on waste vehicles, on decarbonisation work. So we are going to be incurring those charges in future years, and the budget for the coming year 26-27 is based on that basis. So it's a one-off underspend in that regard. Obviously, another number of other underspends in there, as well as quite a few carry forwards. Again, that time of year where carry forwards become quite prominent. So quite a few of those detailed in the table. Moving on through the report, we then flick into the usual context. So we look at where we have our carry forwards. Are they recurring over and over again? And that usual thing is we do get a bit of that happening. And then we move on to the corporate health indicators of the main source of income and how they're achieving them, what they're achieving. We've got the red indicator, as has been the case the whole year, in terms of the legislative management fee, which reflects the situation for the decarbonisation works, things like the fact we have to pay everyone active for the fact that legislation has been closed for certain periods and under the contract to pay them kind of compensation for that in effect. But positively, at the top of paragraph 8.8, and I think I've said before, I thought this indicator might drop at some point, but we're still actually, in terms of legislature visits, we're still above the trend from the previous year. So that's a positive sign, even with some of the closures that have been happening. The number of visits are still slightly up on the previous year. The garden waste collection service, we have seen a drop off compared to the previous year in terms of number subscribing, but it's still above the baseline we set the budget on. So that's why there's no overspend against that. We are seeing a drop off number of customers, albeit fairly slight in terms of customers for commercial refuse and recycling, albeit the drop off in terms of income is much lower. So a small percentage drop off in income in the table above, table 4. And I think it reflects that we have fewer customers but buying more stuff, including buying kind of the recycling services we offer, which is positive in terms of being able to offer that to those commercial customers. On the car parking side, some quite interesting stats there. Overall, we've got an increase in car parking fees, as shown in table 4. And then digging into detail in terms of table 5, it shows that whilst we've had a drop off in the number of average price of tickets, the actual number of customers has gone up by quite a bigger proportion, I think, which probably shows more turnover in our car parks and better use, hopefully, of our town centres. So that's a positive. And I guess that's probably partly driven by the pay on exit parking and enabling that to happen. We then move on into the funding summary and lots of detail there in terms of where we are in terms of various sources of funding, but fundamentally they're all in line with budget. So we get to table 7. The only variance we're showing there is the variance from table 2 in terms of net expenditure, which shows a further increase in our general fund balance, but mitigate that a little bit in terms of some of those carry forwards are going to create new budget for next year, so aren't real underspends in terms of that context. As we've been highlighting throughout the year, because of that big realization of risks in Q1, we are at a deficit in terms of our risk budget, but that has been reflected in general fund balance. So overall, our general fund is holding up, and as it says, it's actually going up a little bit. So that's kind of going through the brief summary of the report. Have to take any questions.
Thank you, Ian. Questions from the committee on the report? Councillor Mason.
Thanks, yeah, Ian. Good report as always. I suppose it's kind of a bit of an eternal question about kind of vacancies and underspends, but I guess are we still confident that kind of any pressures that vacancies might bring about in terms of backlog or service impact are kind of captured in terms of any pressures and risk?
I guess as we get towards the end of the year, we do tend to get more of the underspends or overspends on stuff immediately declared. Usually sort of the start of the year is kind of a bit of a trepidation around sort of what might happen as we go for the year. I think it's always difficult, particularly in some areas around recruitment. But I think we are in general doing better than we were in recruiting staff. But I'll always highlight the risk that we've got LGR on the horizon and the difficulties that will cause or could cause with recruitment. So I'm not going to say there's no risk in terms of recruitment. I mean, we've done some good stuff in terms of some of the non-paid benefits we're providing and making ourselves an attractive place to work. But there are still going to be risks there in terms of both being able to get people in and then the impact that brings in terms of service delivery.
Thanks. Okay. Well, I'll take Councillor Brown, then I'll come to John Cannon afterward. Councillor Brown.
Thank you. It's a very helpful report and the way you run through it, and I like the big arrows. It helps me to be able to read it. But two questions really. One is around Churchgate, and obviously it's been identified as a financial risk and it's a huge project of this council, but I was just wondering how much of a risk is further delay. We still don't have a preferred option for Churchgate. We've got LGR on the horizon. How much of a risk, and is that factored into this? And are you satisfied that we have contingency for that risk if there are significant further delays in delivering that project?
We have highlighted through these reports that we had expected to be able to fund all of the early stages of the Churchgate work through the kind of excess income. As we've highlighted through these reports, we have had some impacts on that in terms of, it's always been difficult to let a shopping centre. It's not an easy thing. It is still generating income, just not quite as much as we hoped it would do to cover those costs. And plus, it is a very complex project in terms of where we're trying to get to with that Churchgate project. So it has incurred more costs than we might have expected. It's been a kind of easy solution. So in terms of looking forward, there will come a stage when we will need a potentially a large capital budget, which isn't yet in the capital programme, as you know. And then that will kind of, I guess, swap some of these revenue costs for capital costs. But at the same time, yes, at some point that would factor in the fact that we will cease to generate as much income from the shopping centre because tenants will leave more quickly because they'll know what's on the horizon. So there's very good work being done by the estates team and our and Praxis as the manager of the shopping centre, trying to kind of keep those tenants at the right kind of level. And they've got a new strategy kind of been developed to kind of work out exactly how to make that work. Ideally, to kind of keep our options open for a redevelopment at some stage, but also keep that income coming in. But there are risks, but I think they're doing a good job at the moment.
No, second question. That's a really good answer. That's very thorough. Thank you very much. The commercial refuse and recycling service, I mean, it feels to me, I think I'm correct in saying that this sort of continues to drop. It feels like this isn't new. And I wonder why and whether there's a further risk of further drop. So is it because there's an increased competition in the market and could this continue to drop is my question really, and what's the risk of that continuing, that trajectory to continue downwards?
I mean, it could continue to drop. I think, I don't know a lot of detail, but I'm sure there is some increased competition, but I'm sure it's also the fact that businesses are struggling, and hopefully they also try and minimize their waste as well, which is also a good sign if they're trying to do that. I know there are plans in the team to, I think there's some budget or a process in place to kind of look at a commercial waste officer or part of an officer's role to kind of drive some business. That will be combined with the fact that they are looking at how to increase the offering to businesses in terms of, you know, different streams they can now recycle. So recycling rather than waste collection in that sense. So I think there's work being done, and clearly over the last year they've been focused on new waste contract, waste mobilisation, and then, you know, the new service change. So I think going forward there's an opportunity to be more focused on that from the waste team, and then I guess we have to see if that kind of pays dividends in terms of reversing that downward trend in terms of loss of clients, and also loss of a little bit of income as well.
Thank
you. John Cannon.
Thanks, Chair. It's a question most likely for Ian, please. It's the last item in the table, the resources net housing benefit expenditure. Appreciate there's an emerging contingent liability in respect of money that the council must repay regarding the housing benefit subsidy that it can't keep. It's a big number this period. It's gone up 200,000 on a budget of 300. I wonder, please, can you give us a sense of scale? I appreciate it's not final yet, but is the forecast outturn limited to just that one anomalous year of 2021-22? I know the narrative says there might be further exposures in subsequent years, and I just wonder for a sense of scale, please, what are we looking at here? Is this forecast outturn specific to one year, or could it go higher relative to other years as they start to impact? Because if that accumulates, you could be looking at a chunky number there. And please, is it going to be financed from the general budget, or is there a ring-fenced fund to repay it from?
So as set on the text, yes, this is a issue that currently the 200,000 issue is for 21-22. Because of the delays in housing benefit audits, that's only just been picked up. To be fair, it was picked up about a little while ago, and that's why in 2024 we've put in place those measures to stop it happening again. But the housing benefit audit has been going for quite a long time, and it's only just been finalised. That's the reason we now declared it as an overspend. It is true that there will be an issue in 23-24 audits when they happen as well. I'd like to be continuing and probably similar level for those years. Because the amount's not known yet, in accounting terms, that's a contingent liability, which doesn't hit the accounts. So it won't be an actual cost in those years, which declare it in our accounts and be it's a potential cost coming to us in future years. So we would expect there to be more costs of a similar magnitude of, say, another £200,000 for 2 more years, so £400,000 in total. When that hits will depend on when those housing benefit audits are completed. I want to be completed as soon as possible. They've been going for far too long, so I am constantly trying to get those pushed through. The next sticking point is 2022-23, which is an audit by Ernst & Young, and then we move to a new provider after that so I'm hoping that once we get 22-23 unlocked, we might sort of see quite a good cascade of getting them all resolved. So yes, more costs to come. Hopefully, he says, because he wants the audit to be done, that'll all hit in 26, 27. And yes, that'll have to come out of the on fund. There's no extra budget for it. But I haven't got the exact numbers, but bear in mind that the total housing benefit we pay out and reclaim from government runs the tens of millions. But that's kind of a cost offset by income. So that's why it's a very small budget we're talking about here, but variations on that can cause big numbers again, but even though it's a very small portion of the overall total we're talking about.
Thank you. For one follow-up, please, then, if I understood properly, there will be costs associated with subsequent years, and you're anticipating that they will all land in 1 year, whichever that might be, whether it's next year or the year after. Is the budget and the financial planning in a position to accommodate that single year hit, rather than spreading these costs over subsequent years where it might ease the pain?
There is plenty of funding in their general fund reserve to be able to absorb that level of impact. Whilst it's not ideal, we can easily absorb that in our forecasts.
Thank you.
Brilliant. Thanks, John. Thanks, Ian, for that. Yeah, that was going to be my question there. Can you just let you put in place processes? It's just a failure process at the time in 21-22, right? From what it says there.
Yes, the rules changed around what you have to do. And that's happened in that sort of that period. And we didn't catch up until, usually we'd have audits done in a timely manner. So we'd pick those up pretty quickly, gone, oh dear, I made a mistake for 1 year, rectify it quite quickly, and then put it in place the next year. We didn't pick it up because the audit's so far behind. I will say it's not our fault. It is the auditors who have got behind. I appreciate COVID had an impact and all that kind of stuff, but still, we would like to be a lot better than they are. So we want to catch up. So when we did find out the issue, we've rectified it as quick as we can. But it is all about the fact we are, even though the claimant, the individual, does not have to pay their housing benefit, we have to notify them what their rent is. So bit of a bizarre situation, but it is a requirement, and therefore we're now doing that, and therefore that removes that subsidy loss from the point in 2024 when we implemented the changes.
Okay. Thank you. Any other questions from the committee? In which case, the recommendations are, and there's a few of them, that Finance, Audit and Risk Committee provide comments and recommend to Cabinet that 2.1, Cabinet note this report. 2.2, that Cabinet approves the changes to the 25-26 General Fund budget as identified in Table 3 and Para 8.2 of the report, a 902k decrease in net expenditure. And 2.3, that Cabinet approves the changes to the 26-27 General Fund budget as identified in Table 3 and Para 8.2, a total 201k increase in net expenditure next year. I propose that. Can I have a seconder for it? Oh, okay. John, sorry.
Thanks. It's only a thought. Ian, what you described there comes across as a technical matter. The root cause of this need to repay the money. Is there any right of appeal? Just a question.
No, unfortunately, we did try. So it goes to the DWP. We did plead and say, please let us not have to pay this. But the answer is no. It goes down to the audit, and that's the final answer.
Is that the final question, John? He's happy. Okay. Well, we can add it into comments in a second. Brilliant. So, as I say, I'm happy to propose. Can I have a seconder on that one? Councillor Ryan Mason, thank you so much. Debate on that. No debate. I suppose we can just forward those comments that John was just making about when these liabilities might fall as to being in 1 year of budget potentially, and leave Cabinet to consider that. Obviously, take that into account. In which case, let's go to the vote.
That motion's carried.
Thank you, Amy. So item 12 then, third quarter capital budget monitoring review for 25-26. And again, I'll turn it back to Ian to present.
Thank you, Chair. Again, the same format as the last one in terms of recommendations are for this committee to think about the risk and governance implications of the recommendations that are going to Cabinet. This is that time of the year, as with the revenue report, we get some certificate of revenue items, we get some certificate of capital items here. So the most of And all of table 2 is around schemes slipping from the current year into the following year. Explanations for each of those as to why that's the case. And then table 3 sets out some underspends, a couple of underspends from waste in terms of the lower cost of fibre waste bins and also the EV charging infrastructure at the Letchworth depot being lower than we thought it would be. Offset slightly by the Section 106 projects, but that's funded from Section 106 money, so it doesn't affect our capital funding requirement, whereas the other two do. So they're positive in that regard. As set out in table 4, as we'd expect, we have an underlying need now to borrow because we'll expenditure this year. So we've got revenue contributions of 3.2 million and a borrowing requirement of 16.334 million. But that's as expected. That was in line with what we expected for this year for the budget. And have any questions?
Questions from the committee on the capital budget monitoring? Okay, everyone's happy? Anything on that? Yeah, John Cannon.
Thanks, Chair. It's an echo of a question from last time. I know I'm skipping ahead to the next paper, but there is a disconnect because the paper we're looking at here at 8.1 describes 127 million of capital assets that the council has. And in the next paper, the 8.1 says continues to refer to 122 million of capital assets that the council currently has. And I just wonder, is today the day to clarify which one it is, please? Is it 127 or 122? Just for the record, so we have a consistent number.
Yeah, thank you.
I will make sure that's corrected and let the quiz know what the correct number is. I won't try and guess off how which one the right answer is. If every 10 minutes I'll be able to go and find out. But
the give or take of the 5.
Fair enough. Thank you.
No, thank you, John, for picking these up just there. Yeah. Really, that's an action item, and you can just email us in this week when you find out, if that's enough time. Brilliant. Any other questions from the committee on the capital monitoring report? In which case, the recommendations here are that the Finance Audit and Risk Committee provide comments and recommend to Cabinet. First 2.1, that Cabinet notes the forecast expenditure of 23.35 million in 25-26 on the capital programme as outlined at para 8.3. 2.2, that Cabinet approves the adjustments to the capital programme for 26-27 as a result of the revised timeline of schemes detailed in Table 2 and Table 3, increasing the estimate spend by 3.01 mil. And that 2.3, that Cabinet approves a change of the scope to the Priory Gardens bandstand project from renovation to rebuild and an increase of the budget in 26-27 by 0.025 mil. And 2.4, that Cabinet notes the position of the availability of capital resources as detailed in Table 4 and para 8.6, and the requirement to keep the capital programme under review for affordability. Again, I'm happy to propose that. Can I have a seconder for that, please? Councillor Brown, thank you. Debate. Yes, Councillor.
Just want to say that I'm very happy to see the Priory Gardens bandstand is going to be rebuilt rather than renovated. That's been an ongoing project that we've been looking to. Well, a lot of local residents have wanted that done for some years. So to see that it's actually going to be done and it's in the budget and with an increased budget is welcome. Thank you.
Thank you. Any other comments? No, everyone's happy with that. Let's go to the vote.
That motion's carried.
Thank you, Amy. And this comes to item 13, the third quarter Treasury Management Review for 25-26. Councillor Ward, you'll be declaring your interest.
I am. Yes, Chair.
Yeah.
Thank you.
And you will leave the chamber for the remainder of the item.
So I'm so interested, I'll leave the chamber.
But you will be coming back this time. Oh, okay, then. Thank you for joining us this evening. And it'll be Ian Cooper to present now.
So this is position on our treasury investments. We have complied with the treasury strategy throughout the quarter, and continue to have the balance of our investments with local authorities. So as said, and table 8.4, that gives the overall split, and the detail is in the table in paragraph 8.5. Just as a kind of forewarning, as we head towards the year end, we are seeing some increase in interest rates because local authorities generally, well, some local authorities generally run out of money towards the end of the year, so borrowing money to that point of year. Any cash flow, not actually running out of money completely. So we are seeing some rates going up quite high for short periods over the end of the year. So we're taking advantage of those where we can. I guess we had expected that we would see, or certainly be in the near future, be seeing some bigger drops in interest rates. The global political situation means that probably might not be the case now. So we'll probably see some increased interest income compared to what we're expecting going into next year. But obviously the bigger impact, just to flag on kind of the revenue side, is the impact of inflation. And if that it becomes entrenched, then that will affect the revenue budgets and to a greater extent. So whilst good news on the treasury side, the overall impact of the council will not be so positive. So we'll keep an eye on that because that'll be an important thing to keep an eye on for the next year. But happy to answer any questions.
Thank you. Councillor Brown is ready with a question.
Thank you. Given the fact that 82% of our investments are in local authorities, and with LGR on the horizon, it may not affect all of these authorities, of course, that we invest in. I know they're normally considered a safe bet, but can you comment on the risk? Do you think the risk is going to increase because of LGR on the horizon or not?
So there'll be two aspects to it in terms of risk. In terms of if we've got borrowing with one authority and that moves to a different authority, the borrowing will just follow it. So there'll be a process, and we're looking at it for Hertfordshire around what happens to our balance sheets as we move from North Herts into a new unitary. We've always started to look at the kind of the theory of it, so we know it's going to happen. But yeah, any debt we have at that point will move with us, and vice versa. Any borrowings would move the other way, will also move to a new authority. The other side, in terms of the capacity and availability of local authority investments, that's probably the potentially bigger risk. So currently, looking down at this, we've got a mixture of districts and counties and unitaries in that list. So particularly those earlier ones, I don't know if we've got many on this at the moment, those ones that are kind of in the earlier phase of moving from districts and counties into unitaries, that may affect what cash they've got in terms of whether they want borrowing or what the shape of the borrowing they want might be. But flagged as part of setting the treasury strategy, the increase in limits to allow up to 5 million with a unit with a local authority, and that I think will help with some of that risk, because as they move to bigger authorities, they were less interested in our £1 million here, £1 million there. So that will help in terms of being able to invest those bigger amounts they may be more interested in, to kind of keep that availability, particularly with the proposal that was adopted as part of the treasury strategy around changing our profile in relation to banks and just looking at those kind of greener ESG investments with banks, which are more limited, to mean to keep our options open. So there are risks there. Government is always a backstop. Doesn't pay as good rates, but government is always a backstop in terms of investing our surplus cash if we need to.
Thank you.
Just out of interest, what are the levels at a county council that they're allowed to invest at? Do we know?
Usually, as with ours, the levels are set based on the total available cash here, the percentage of the total available cash. So because counties will generally have, well, they'll have bigger borrowing, but also bigger cash investments as well. They'll tend to have bigger amounts they're prepared to kind of to get involved in. So yeah, that's why we've set the 5 million for the receiving side of it.
Okay, cool. Any other questions on this? No. Anything from John? No. Brilliant. Oh, we have, yeah. Okay, John, please.
Thanks. Just interested in the investment maturity graph on page 201. A lot of investments matured in January 2026. Please, can you just fill us in on what happened? Do they just get reinvested for different periods with similar organisations. I think it was about 18–19% of the total portfolio was maturing then. I'm just curious as to what the next step would be.
Yes, they'll be reinvested. The issue we've had this year, we've had a lot of capital spend. So we've had a lot of spend on the decarbonisation project for leisure centres. We've had the waste vehicles we would have purchased by January, but they were a factor earlier in the year. And we've still got the cost of the waste contract to kind of resolve the various invoicing issues around that and around sort of agreeing on the amounts we paid and make sure they get the money over to Veolia. There's been a lot of stuff going on where the timing of exactly when that money's going to go out the door has been uncertain. So we're deliberately keeping cash quite short on the principle we expected to kind of have big invoices coming in. We don't want to be short of cash to pay those invoices. So that's why there's a lot of money maturing in January. If we looked at that graph as at the end of January, there's a big lump in February. There's a new maturity date. We then kept it short again, just in case for when those invoices came in February. We are kind of slowly seeing them come in and paying those invoices as they become due. But because of the uniqueness about how they're all sort of new things, one-off things, it's been more difficult to get on top of exactly when those will hit and therefore know exactly how long we can invest cash out for. If we'd had forewarning and known exactly what we know now, we probably looked at a different maturity profile. We'd have kept some of that cash going out longer. So we're going to get slightly better returns on it. But we've got to be prudent around making sure we've got the cash to pay the bills when they come in. And sometimes we have to forego some interest on that to make sure we're in that position.
Any follow-ups on that, John?
No, that's fine. Thank you very much.
Thank you. Any other questions? No. So the recommendations for this item are that Finance, Audit and Risk Committee provide comments and recommend to Cabinet. That Cabinet notes the position of Treasury management activity as at the end of December 2025. Again, I can propose that. Can I have someone to second that for me? Councillor Willoughby, thank you. Any debate or comments on Treasury management? As well, it's just positive that we counterintuitive. We have the benefit of the increasing interest rates means we get more return on our investment, which hopefully will mean we can do more next year, potentially. In which case, let's go to the vote.
That motion's carried.
Thanks, Amy. And that brings us to our usual item 14, any possible agenda items for future meetings. As always, sourcing for any topics that we might want to consider on our agenda. We just heard one earlier this evening from John Cannon based on what we saw, so that might be something. But does anyone have anything at this stage? We always ask in hope. Chris?
Thank you, Chair. It was less an agenda item because it's not for me to propose the agenda items for this committee. I wondered if this was the opportune moment to pick up the conversation we had at the Chair's briefing. Members will recall back in January, I bought a paper on the Domain 3 of the Global Internal Audit Standards, and one of the things which we don't currently do is have a meeting, a private meeting of the committee with the head of internal audit. Councillor Brown, you did ask what we might talk about at that meeting. I would still like to propose that that meeting goes ahead and that we at least try to see how it works. I had in my head some dates in July on but I'm not sure whether those dates will be discussed now, or whether I circulate something outside the meeting, but I just wanted to formally put that forward within the meeting.
Yeah, brilliant. If you could circulate some date options to the committee, then hopefully we can finalise one. Again, we'll have more awareness of our scheduling as well, going after May as well. But if you do that, then we can lock one in. Yeah, does that sound okay? So July, was it?
Yeah.
Primary, yeah. So we can aim to have something of those dates in July. Councillor Brown?
Can I just ask that it's before the schools break up, if it's in July? Thank you.
Absolutely, that affects me too, Councillor Brown. I was actually proposing the 3rd, 10th or the 17th, and the schools break up, I think, on the 17th. So.
Brilliant. So if you circulate that one round, and we'll get that
Absolutely.
confirmed and put into the diary. Amazing. In which case, I can wrap us up for this evening at 9:15. That's the last meeting for this civic year, so I'll look forward to seeing those of you returning to this committee in the next civic year. Good evening, everyone. Thank you so much. Kept it